Hello and welcome to A.N.D Direct's Credit Coaching and Funding webinar, where we'll explain how to leverage your personal credit to access the capital you need. Today's webinar was presented by Arlen John Wallace. Arlen is the CFO and co-founder of A.N.D Direct LLC for 15 years. Arlen has been perfecting ways to effectively stop creditors, debt collectors, and credit bureaus from violating our rights in commerce. Credit repair and restoration. The process that I'm about to share with you represents the state-of-the-art in credit repair and restoration that is totally legal and ethical. The thing that I had to understand and that I hope to impart to you is that commerce is not about morals and you are not dealing with natural persons. For example, I believe if you borrow money from a friend or a family member, you should always pay it back if you can. But on the contrary, when dealing with corporate entities, you have no such compunction. Why? Because corporations, for one, don't have any moral compunction toward you, and more importantly, their very existence and ability to have the capital to lend you required your confidence, consent, and our collective liability in the form of the power granted of the government to create and enforce the money in commerce and the surety we all give by our work and consumption and the value of that money. In law, we have underlying debt elimination and discharge rights, and on the flip side, those corporations have the right to write off those losses. This balancing of accounts means that you do not have to pay debts if you can prove that the lender has violated the law or in some other way is over-benefiting from your debt. For example, the lender wrote off the debt but continues to pursue you for it, or they sold the debt to a debt collector. This can effectively cancel the debt and substitute themselves with the debt collector. If not done properly, this can be illegal and present a remedy for us. 99% of debt owed to lenders is written off after 180 days. So the further negative reporting is number one, a sick form of retaliation, and number two, the business model for credit reporting agencies to help lenders increase revenue by using your bad credit to increase interest rates. Banks can never stop lending because without lending, they have no revenue. But if they can find quote unquote justifiable reasons to raise interest rates, they will. Our state-of-the-art dispute process. The first thing to understand about our process is that it's designed from start to finish to build a case and easily win a small claims lawsuit. Post-repair and build credit. The certified mailing, the affidavit form of disputes, and good record keeping is all preparing for the filing of a small claims lawsuit if you do not get the results that are required under the law and in equity. Understood? Good, let's begin. SOP and custom OPs. Credit coaching and DFY standard operating procedure. Round 1. Dispute personal information, freeze all ancillary credit reporting bureaus, and VOD to debt collectors. Round 2. General dispute letters, inquiry dispute letters, dispute accounts included in bankruptcy if applicable, and attached copy of the debt collector NOD letter. Round 3. Method of verification, dispute letter with copy of debt collector, VOD and NOD letters. Round 4. CFPB complaint, FTC complaint, client state attorney general complaint, all initiated by the client. Round 5. Compile correspondence documents and file small claims lawsuit. Round 1. Personal information, dispute and correction. This includes driver's licenses, social security cards, and utility bill or bank statement attached. Step 2. Debt collector VOD, also known as verification of debt affidavit. We make the template available as a download in the client portal. Client must get notarized and upload to our portal. Ancillary credit bureau freeze letters, LexisNexis, Innovis, ARS, and NTCUE. Step 4. Client waits 28 days, signs and notarizes the NOD, also known as the Notice of Default letter, for mailing in Round 2. Round 2. All collections, charge-offs, late payments, inquiries, accounts included in bankruptcy disputes are mailed by certified mail for dispute letters and notice of default. Driver's licenses, social security numbers, utility bill, and bank statements are attached to the dispute letters. Round 3. Method of verification, also known as MOV, letter for all disputes. Attach copy of verification of debt letter. Attach proof of service. Tracking number and signature is attached. Also attach copy of notice of default letter. Proof of service attached again. Round 4. Correspondence available in Client Portal: dispute letters, debt collector VOD DTC letters, notice of default letters, proofs of service, tracking numbers and recipient information, FTC complaint initiated by the client. 3. CFPB complaint initiated by the client also. Client State Attorney General complaint initiated by the client. And 5. Client must upload all filed complaint documents to the client portal. Round 5. We will mail the client copies of correspondence and proof of service, tracking numbers, dates, and signatures so that the client can initiate a small claims lawsuit locally. Personal credit development. Building upon and in conjunction with the credit coaching and DFY process, we offer personal credit development. This strategy and process, too, is based on 15 years of experience, but unlike keeping up with slower-moving legislation and laws regarding consumer rights in the context of credit repair, things change much faster in the area of lender underwriting standards. Underwriting is just the standard and lender-specific requirements for approvals and even limits and interest rates for those approvals. In this area of research, we have taken first-hand experience, broker feedback, and anecdotal data points from consumers like you. All of this data is put on top of the ratios and other computations we know that Fair Isaac Corporation, also known as FICO, uses. FICO score breakdown: 35% is payment history, 30% amount owed, 10% types of credit in use, 15% length of your credit history, and 10% new credit. How to optimize your FICO score. Payment history is 35%. Make all payments on time. Without doing this, building credit is a non-starter. If you have late payments on accounts, be prepared to pay those accounts off and close them. Late payments, even if you catch up and become current, ruin your credit score and profile and will prevent you from qualifying for high-limit credit approvals. Amounts owed is 30%. Keep your utilization low. Even if you make all payments on time, high utilization or high balances will kill your score and lower the strength of your credit profile. The optimal utilization is less than 20% in aggregate and on any one card. History is 15%. Unless you have late payments on an account, keep all credit accounts open to build history. To add history that you cannot build organically, you can be added to a friend or family member's aged account, so long as it has excellent payment history and low utilization as an authorized user. Credit mix is 10%. You need to have or add to your credit profile different types of credit, such as installment, automobile or personal loans, and revolving credit cards and lines of credit. Mortgages are the best type of installment loan and significantly boost your credit score and profile as it ages. New credit is 10%. Although length of credit history is critical, you also need to occasionally obtain new credit to maximize the strength of your credit score and profile. Try to get new credit with a lender you already have a relationship with. Only get 1 to 2 new credit cards or installment loans per year to limit the negative impact on your average account age or length of credit history. Personal credit profile building. Non-essential account to essential accounts. We recommend and help you open accounts for this strategy to limit the number of inquiries. We suggest that you create a monthly expense budget and take that amount of cash and use it to open a secured credit card. Optimize diversity of account types. We recommend opening 2 to 3 revolving store card accounts. We recommend opening 2 to 3 installment accounts, and again, we recommend and help you acquire these accounts. Build an understanding of underwriting. Understand that the way you build will have an impact on your FICO score. Understand that lenders tend to match the limits of your active accounts. Minimum 6 to 7 active accounts. FICO boosting payment strategies. Use credit cards, secured or unsecured, to pay monthly expenses. Make 2 monthly payments and pay off credit card balances each month within 28 days. Put credit card payments on autopay. If your bank account or credit card doesn't allow autopay, we recommend using companies like Plastic.com or Western Union. After the initial period of monitoring, apply for credit increases or for secured cards to be converted to unsecured. Instant credit application strategies. Apply for 3 to 4 personal or business credit cards per bureau. Using the lender underwriting data points we've accumulated, we mostly know which bureaus each lender pulls for approvals. We also use the strategy of applying for multiple lenders at once to keep them from seeing other inquiries during that round of funding. We typically see 50 to 65% approval rates per round using our application strategies. Dispute all non-approved inquiries. Apply for FICO boosting payment strategies using the card with the highest limit and/or the best reward programs. Corporate credit compliance. Number 1, incorporate a corporation or LLC in your state of choice. We suggest Manager Managed Wyoming LLC, and we suggest filing a IRS Form 2553 to elect to be treated as a S-Corp after initially getting an EIN. Number 2, acquire commercial business address. We suggest finding a virtual office that provides a real street address not registered as a mail center. We also suggest a virtual office company that provides business phone numbers and fax numbers. Number 3, register business and business phone with 411 and a business phone number. Number 4, get an EIN for that business entity from the IRS. Number 5, set up a company website with a business email account. Number 6, apply for and get a DUNS number from Dun & Bradstreet. Number 7, open a business bank account. Number 8, set up 4 to 6 net 30 vendor accounts and make payments within 28 days. Number 9, achieve an 80 paydex score with Dun & Bradstreet. Number 10, establish both Experian and Equifax business profiles. 10 tips to build business credit. Goal 80 plus paydex, 80 plus IntelliScore, 160 plus SBSS. Dun & Bradstreet paydex. Have a minimum of 6 vendor accounts and make minimum purchases of $75. Pay all accounts in 15 to 28 days from the date of invoice or time of shipping. Experian and IntelliScore. Have a minimum of 3 revolving accounts, such as business bank credit or store cards. Pay all minimums or full balance every 28 days. Set up autopay from your business bank account. FICO Liquid Credit SBSS. Maintain good to excellent personal credit of 720 plus FICO. Follow tips for paydex and IntelliScore above. Maintain net positive or increasing balances in business bank account. Tips for maximizing credit approvals and limits. Personally guaranteed business credit. Have excellent personal credit score and profile. You should have at least 1 credit card account with 2+ years history and a $10,000 high credit limit. Have at least 1 installment loan, mortgage, or automobile. Have a compliant business entity. All legal documents and credit bureaus have consistent information, such as owners, officers, addresses, phone numbers, etc. Have a bankable business entity. Avoid non-bankable company names, codes, or industries such as cannabis, real estate, or gambling. Establish business credit. 6 vendor accounts, 2 to 3 financial or commercial revolving accounts. Also have a bankable business entity. Non-personally guaranteed business financing. Maintain net positive or increasing balances in business bank account. Grow business credit. Have 12 to 15 vendor net 30 or revolving accounts. Specific types of business financing. Business lines of credit, non-SBA guaranteed. Business loans, non-SBA guaranteed. SBA loans, 7A up to $350,000, SBA Express up to $500,000, or traditional up to $25 million. Hard money for real estate. Merchant financing, short-term, paid daily, weekly, or monthly. Business credit continuum. Once you have a minimum 700 FICO credit score and we've completed your corporate credit compliance, we will then enroll you in our Partners Funding Program, which continuously applies for new credit every 30 to 45 days, advises on credit improvement strategies to get more and higher limit approvals, continuously reapplies for credit increases, and personally guaranteed business funding. Corporate credit compliant. The other is for non-personal guaranteed business funding, and you would get a 12-month subscription that connects you directly with the vendors and lenders you qualify for, unlimited consultation, guides you through the multiple tiers of business credit to maximize approvals, and pre-approves you for business credit by qualification data points. Nothing is guaranteed, but you can reasonably expect, and I am confident in telling you that if you go through our 4 service offerings, credit coaching and DFY, credit development, personal financing, and business development and financing, and sign up to extend your coaching for a full year, you will have gained access to $150,000 in 6 months and up to $250,000 in 8 to 12 months. If you sign up for our virtual CFO service, we will also do your bookkeeping, accounting, bank account reconciliation, and rebalancing. Not certified, of course, because we're not CPAs, although we can bring in partners who are for an extra fee. But we will prepare financial statements and file your taxes for you. All of our services are geared toward keeping the guesswork out of getting access to capital and easing the tedium of accounting type work, so you can focus on running your business or collecting your passive income from the investments you made with the capital we helped you get. The process is not quick nor simple, but it is straightforward and foolproof. If you work with us and follow the steps, you will get access to the capital that you need. If someone told you that starting with basically the money you have now, that in 6 to 12 months, you would be sitting on $150,000 to $250,000, you'd jump on that opportunity, right? Well, that's exactly what I'm telling you right now. Again, nothing is guaranteed, but I have been doing this for 15 years, and the only people that don't succeed and get what they're supposed to are people who didn't invest in themselves when they needed to in this process or didn't follow our recommendations. So in a year from now, will you be in the exact same place? Or will you be another of our success stories with $150,000 to $250,000 at your disposal? Get started today. Go to the link below or in the description of this video, sign up for the level of service you are at credit-wise or that you can afford right now, and work with us for 6 months to a year and get on the journey to financial freedom. Thank you for your time. Take care, and I'll see you next time, where we'll be discussing the 4 to 5 industries I'm invested in and that I can recommend to clients once we help them get access to capital for active or passive income. A.N.D Direct, your partner in the new economy.